As we approach the next Federal Reserve meeting, the seasonal data suggests a typical pattern where the S&P 500 tends to rally leading into the Fed's second meeting day, but then often declines afterwards. The S&P 500 has experienced losses during the specific two-day window with an annualized return of minus 53.14%, and 45% of the trades post the Fed meeting have resulted in losses, underscoring a bearish bias. You can also see sometimes those losses can be quite pronounced, sometimes falling as much as 3% in the 2 days after the Fed meeting. So this trend does suggest that investors tend to take profits or react to the news, especially when the Fed's communication leans more cautiously than anticipated. A major factor driving potential post-Fed declines is the Fed signaling regarding the future path of interest rates. So if Jerome Powell signals a slower or much more gradual pace of rate cuts than are currently expected, it could disappoint the markets and weigh on stocks. So that's something definitely to look out for. So if Powell's sort of signaling less rate cuts than short-term interest rate markets are currently expecting, then stocks could fall quite hard. Technically, if we look at the S&P 500, you can see that we've seen an uptrend in place for some time. That 5440 region has acted as a support as anticipated, and there's a long-term trend line that price is trying to move back up against. So the price has consistently respected this trend line and is reacting around it at the time of making this video. So as long as we stay above that trend line, the bullish bias is in place. But obviously if price capitulates and falls back down through that trend line, it's not a bad place to define and limit risk. So just be mindful of a potential decline in the S&P 500 following the Fed's announcement, especially if Powell signals a much more cautious approach to interest rate cuts than anticipated and as flagged by the SeasonX seasonal pattern. Remember, don't just trade it, but SeasonX it. Sign up here for thousands of more seasonal insights just waiting to be revealed. Trade risks, all outlooks have risk, of course, and this is no exception. And past patterns don't necessarily repeat themselves. And of course, the Fed meeting is highly dependent on what Jerome Powell actually says rather than just the seasonal data in and of itself.